Hey, what's going on, crypto people? It is the Crypto Siege with another day in the life and the crazy life that is the digital asset space. Did FSOC just get the okay to destroy crypto? Interesting stuff. Let's get into this article from Reuters. It's very interesting to me. The FSOC publications is a little lengthy. This article kind of highlights the ins and the outs, and the good and the bad. We're going to get into that. Let's go over the market real quick as well. According to CoinGecko, shout out to CoinGecko, and screw CoinMarketCap. I know it's changed hands since 2017. I know it's changed hands, family, but screw CoinMarketCap. They did damage to the XRP bull run 2017, 2018. Let me refresh this, make sure this is up to date. Inaccurate if the computer will work. So there currently is at 1.21 trillion is the total cryptocurrency market cap. And that, my friends, is down 1.22 trillion. It's down from over 3 trillion as an all-time high for all the new people out here following the crypto siege. Down from over 3 trillion. The Bitcoin dominance is at 43.9%. So you know what that means, right? You know what that means, right? No alt season when the Bitcoin dominance is at 43%, almost 44%. Bitcoin's trading at $27,581. Ethereum is trading at $1,879. XRP is trading at 10 cents, trading at 47 cents. It's down 10% on a 7-day. Bitcoin and Ethereum are down 9.5% and 10.8% respectively on the 7-day. So again, guys, the market is just doing what the market does. Let's go with this article from Reuters that says U.S. financial regulators to tighten rules on non-banks. Systemic risk, it says. Systemic risk. U.S. Treasury Secretary Janet Yellen testifies during a U.S. House Committee on Financial Services hearing report of the Financial Stability Oversight on Capitol Hill in Washington, D.C. That was last year, 2022. We don't care about that. So is this a We'll see here. That's just a picture. Washington, April 21st, top U.S. regulators on Friday proposed new rules to speed the assessment of financial stability risk and make it easier to designate non-bank institutions as systemically important, subjecting them to Federal Reserve supervision. BK brought this up a while ago about FSOC and that ability to do such a thing. They proposed this. Top U.S. regulators on Friday proposed new rules to speed the assessment of financial stability risk and make it easier to designate non-bank institutions as typically important, subjecting them to the Federal Reserve supervision. The multi-regulator Financial Stability Oversight Council released a proposal for public comment just over a month after 2 regional bank failures sparked the biggest financial system contagion since the 2008 financial crisis. U.S. Treasury Secretary Janet Yellen has raised concerns about non-bank financial institutions, non-bank, including hedge funds, because of their lack of supervision and a potential for systemic spillovers from firms in distress. And I ask you, is this giving the FSOC the okay to crush crypto? Because if the FSOC deems that anything dealing with U.S. and U.S. citizens can cause financial harm to the financial stability of its nation, what if they say the stable coins cause such a harm? What if they say if the digital asset space causes such a harm? Revisions to guidance, continuing from the article, revisions to guidance on branding such firms as systemically important reverse some aspects of Trump era changes in 2019 that made such designations more difficult. Yellen said the new guidance removes some inappropriate hurdles to designating non-bank firms, causing the process to take up to 6 years. That's an unrealistic timeline that could prevent the council from acting, says Janet Yellen. Yellen, address an emerging risk to financial stability before it's too late, she said in remarks to the FSOC meeting she chaired on Friday. The new guidance drops the 2019 requirements that FSOC assesses the likelihood of a firm's financial distress, apply an activities-based approach, and conduct a cost-benefit analysis prior to designation, which National Credit Union Administration Chair Todd described as a Rube Goldberg-like process. Don't know what that is or who that is. These will be replaced with a quantitative and qualitative analysis process under which the council determines whether material financial distress at the company or the company's activities could pose a threat to U.S. financial stability. Material financial distress at the company or the company's activities, or that the company's activities could pose a threat to U.S. financial stability. That or is important to me. So it's saying two things. If a systemically important company has some financial issues, we can come to designate it as systemically important sooner rather than later. Or if the company's activities pose a threat to U.S. financial stability. It's an or. Either one can take place. So what do you think they're going to do if a company's activities pose a threat to the United States financial stability? What do you think they're going to do with that company? Maybe do something like Silvergate? Do something like Silvergate? I get Silvergate's a bank, but this is about the non-bank companies. A Treasury official told, continuing from the article, a Treasury official told reporters, adding that it was not a complete return to 2012 guidance. The revised designation process also allows for ample engagement between regulators and a company under review, officials said. Federal Reserve Chair Powell told the meeting, overall, I believe that the changes proposed by the council will create a balanced approach to addressing potential risks to U.S. financial stability and ensure that all tools available to the FSOC will remain on equal footing. Hedge funds not happy. Hedge fund says mutual fund and asset managed trade groups responded by saying that regulators should look elsewhere for threats to financial stability. I wonder where they're thinking about they should be looking. We know that designation of a registered fund or fund manager would be the wrong answer. Eric Pan, CEO of the investment company Institute, said in a statement, FSOC should avoid concluding that entity designation and the application of bank prudential regulatory tools is the right way to carry out its mission to mitigate risk arising from asset management. The Securities Industry and Financial Markets Association Asset Management Group said that because asset managers are directed by their clients and hold small balance sheets, they should not be designated. The group added that the reversal of Trump-era guidance is concerning. And I promise you, this is more about the digital asset space than anything else. FSOC's proposed new risk assessment framework aims to enhance the council's ability to address financial stability risk by reviewing a broad range of asset classes, institutions, and activities. According to a Treasury fact sheet, these include markets for debts, loans, short-term fund equities, digital assets, and derivatives, counterparties, payment and clearing systems, and financial entities, including banking institutions, broker-dealers, asset managers, investment firms, insurers, and mortgage originators and services. And the purpose of all the agencies in this nation is so that we can find when something comes that they don't like and they feel like it's a threat to the fiat dollar monetary banking system, they can just pull a regulator out of their butts and go after that particular entity. U.S. financial stability. We got these hints of DeFi. We got these hints of DeFi platforms posing potential risk to the financial stability that just came out not even 2 weeks ago. The new framework also specifies vulnerabilities that FSOC and member regulators would consider when evaluating potential stability risk. These include leverage, liquidity risk, and maturity mismatches, market interconnection and concentration, operation risk, and risk management activities. So I ask you, crypto fam, did FSOC just get the blessing? Did they just get the nod to, whenever they decide to designate that a digital asset platform, non-banks, pose a risk to the financial stability? Is this the opening for them to go after and come after DeFi? Sounds like it to me. It really, really does sound like it to me. All right, guys, listen, this has been your XRP Ripple Daily News. Let me know in the comments what you think. Is this opening the door for them to come after non-bank crypto firms and the DeFi space as well? This has been your XRP Ripple Daily News in around 0 to 10 minutes. I hope that it has been of value to you. If it has, do me a favor and hit that like button. And please don't forget, if you've been hanging out watching the crypto series, please consider subscribing to the channel. Don't just hang out. Subscribe to the channel and ring that notification bell so that you know whenever we go live or whenever we upload a video. I'm going to end this one like I do all of my videos and remind you guys of this.
Old money doesn't want you to win. They don't want us to win. They would rather that we remain a cog in their perpetual wheel of trading our time for dollars. They don't want us to play in the same playground that they play in, where we allow our money to work for us. This is our chance to win, guys. The digital asset space is our chance to win. We are in the midst of the greatest transfer of wealth in the history of man. Are you participating, or are you standing on the sidelines? Here's what I do know, that the battle for you has already been fought, and the victory is yours. Go get it.